HDFC, that's a stock. We should pull up that stock first. In line with some of the other financial names, this one has done well too. They reported a 40% growth in the net profit for the March quarter. Vice Chairman and CEO Keki Mistry believes that while all the segments for housing are doing well, lending rates are likely to remain stable over the next 3 to 6 months. Listen into a slice of a conversation.
I think it's a structural demand for housing, which is driving and creating more people to buy houses. There are several reasons why the demand for housing is strong. First is housing in India has become a lot more affordable compared to what it used to be in the past. And when we talk of affordable, we are not talking just of bumps in central Mumbai or South Mumbai or Delhi or Bangalore, any of the big cities. But in the outskirts of the cities or in tier 2, tier 3 towns, housing is very affordable. Secondly, the penetration level of mortgages in India is extremely low at 9% of GDP. If you compare that with Western countries, US is 63%, UK 68%, even closer home, China is 22%, India is only 9%. So we have such a low penetration of housing finance. The third is, and according to me, what is causing the large part of the growth now, is this huge focus by the government on affordable housing. And the government's done what it could to encourage more people to buy houses. There are fiscal benefits associated with a housing loan. The interest on a housing loan is tax exempt to the extent of 2 lakhs rupees. The principal repayment of a housing loan qualifies as a saving, and along with other avenues of saving, gets a deduction of up to 1,50,000 rupees. So both interest and principal can be reduced from the taxable income of an individual.
You know, affordable housing as a sector, I mean, it's been around for a very, very long time, but the push from the government and therefore lenders in this space is fairly recent. But in terms of stresses that come out of the segment, are you seeing any trends?
We are not seeing any. So the way we appraise an affordable housing loan is no different from the way we appraise a normal housing loan. So we look at the repayment capacity of the individual, we look at his ability to service the loan, and then we decide whether to lend money to a customer and how much money we'd be willing to lend at. So we've not seen any significant variation in asset quality, whether it's to a borrower in the affordable housing segment or otherwise.
How do you plan to capture further market share in terms of the affordable segment? Because considering that's probably the area where a lot of the growth is going to come for the next couple of years.
To my mind, the growth is coming from every sector. It's not only, I'm talking so much about affordable housing because it comes from a low base.
Sure.
But the growth is coming in every segment of the market. Our average loan size for new loans we've done in the current year is 26.4 lakhs. Last year's average was a little higher. So the average loan has actually come down because of the greater focus on affordable housing this year. But it's every segment of the market other than the luxury segment which is growing well.
Just last bit on the lending rate front, because that's something that we've seen some of the other lenders as well as yourself raising your benchmark prime lending rate, trying to get, you know, what exactly is this is the trajectory that we're expecting from the lending rates in the coming months?
See, my sense is market rates have gone up a lot more than what RBI has raised rates. So RBI has not raised rates. Market has kept taking rates higher and higher. So market expectation is that RBI will increase rates. That is the logical market expectation. Sure. I don't expect market rates to go much higher than what they are now. My outlook or my belief is that over the next 3 to 6 months, we should see a relatively stable interest rate regime with a slightly downward bias as far as market rates are concerned.